Coming up in this episode, a plan to restructure the US dollar, a $5 billion AI mega deal between Dell and Elon Musk's XAI, and the truth behind the armored Tesla controversy. Plus, why European defense stocks are soaring while US military giants take a hit. And the real story behind stock buybacks. Are they a wealth building tool or just corporate greed? We'll break it all down. Stay tuned. Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm recording live from Seoul, Korea this week. I will be back in the U.S. next week. And I'm here with our host, Rob Farian. He's the CEO and founder of Flying V Group, our digital marketing partner. Rob, what 5 things have you accomplished this week?
It's a great question. You know, I'd have to probably sit down and think about them. I don't think I got maybe more than 1 or 2 done today. But hey, how much more can you ask for, right? I don't think we can ask. Gary, how is Korea? Let me know. I know you're in a new spot since we last spoke.
Yeah, so unfortunately, I have some really bad news, Rob. Yesterday, I was walking around Seoul, and I went to visit one of the ancient palaces where the emperors or the kings used to live. And even though they were open until 6, last entry is 4 o'clock. I got there at 4:17, and they would not let me in, which leads me to draw the conclusion that I am not the king or emperor of Korea. I had been secretly hoping, but I've been disappointed. I figure if they don't let you in, you're not the king.
Absolutely love it, Gary. And we've got, again, another great episode of the 5 things. We're calling this the defense issue. We're talking the dollar. We're talking Dell. Tesla makes an appearance. Armored Tesla. Stay tuned for that. We're looking at European defense stocks, and then we'll get into stock buybacks for our 5th and final thing, and that investor education. Gary, you ready to jump right into it?
Let's go.
Gary, thing number 1, we're talking the US dollar restructuring conspiracy. Tell us what we need to know.
Well, what if I told you the U.S. government might be sitting on an $800 billion secret? A newly surfaced economic report is fueling speculation that the dollar could be restructured in a way we haven't seen in over 50 years. Could this be the financial shakeup of the decade? Let's dive into the details and separate fact from fiction. So, Rob, what's happened is nobody has taken a look at Fort Knox in well over 50 years. There are all kinds of rumors that whether the gold is there or not. That's kind of interesting. The fact that they haven't audited it for some reason, maybe we'll see. I don't know. But there's this recent theory, conspiracy theory, I don't know, whatever you want to call it, that the U.S. could revalue its gold reserves. So right now, I forget, I want to say they're valued at something like $45 an ounce. And, the current price of gold is quickly approaching $3,000. If the U.S. were to revalue the gold supply to current levels, it would increase the assets of the United States by approximately $800 billion. And that action hopefully would come concurrent with an audit of the gold reserves in Fort Knox. So, fingers crossed, we're hoping the gold is actually there. And so the big question is, what happens if the new Trump administration simply added another $800 million of currency to the economy? Well, that's going to cause an increase in inflation. That's something that's reviled by the population. It's a really good way to lose the mandate of the people. There's also been talk that the incremental $800 billion in assets could be used to reduce the national debt. That would lower borrowing rates. It would be a huge help to the new Treasury Secretary looking for a way to refinance Janet Yellen's shortening of the duration of the country's bond liabilities. So there are a lot of options here. And the key thing is, we don't really know what they're going to do or if they're going to do it at all.
Gary, if they were to proceed and if being the Trump administration with their plan to revalue gold, the holdings that the U.S. has, what would you like to see them do with that increase you see in value?
So, Rob, at this point, I think revaluing the gold reserves is unlikely. It's really hard to break with, around 100 years of tradition, maybe a little under that. But should they proceed, one really interesting potential move would be to use the additional $800 billion to start to buy Bitcoin. Now, could you go buy $800 billion of Bitcoin? That would be hard. Right now, the current market cap of Bitcoin is a little under $2 trillion. So, that would send things up a lot. But could they go buy a few $100 billion of Bitcoin? Yeah. And if they did that, it would leave total assets and liabilities unchanged, properly value the gold reserves, and diversify our national strategic financial assets. This is something we'd support. I'd love to see it happen. Don't have your fingers crossed. I don't think it's likely, but we'd certainly love to see it.
All right, Gary, moving to thing number 2, we're talking Dell. Dell's got a contract with XAI near completion, Gary. That's thing number 2.
Well, Elon Musk's XAI just locked in a $5 billion contract with Dell. It's one of the biggest AI infrastructure deals to date. With demand for AI servers skyrocketing and NVIDIA's powerful chips at the core, this move could reshape the future of AI dominance. So let's dive into what it means for the industry. Basically, Elon Musk, he was part of the group that put together ChatGPT. There's been a lot of talk in recent weeks about making a bid for OpenAI and that being rejected. And so Musk, in his typical fashion, started his own XAI. It's called Grok. I've actually used it on the X platform. I think it's pretty good. It's given me some good answers to things. And right now, AI specific server demand is at an all-time high. And Dell is going to begin delivering servers equipped with NVIDIA's new powerful chips later this year. This contract, I would say it establishes Dell at the top of the AI server space, but they're already there. I think a better way to phrase it is it continues to reestablish Dell as the leader in the AI server space.
Gary, we're seeing more AI infrastructure spending. I think we spoke about it last week. It looks like it's not just Microsoft, Google, and Facebook, is it?
Yeah, if Elon Musk's X to power Grok is spending $5 billion, just to give you a sense of how much that is, Elon Musk paid, I want to say it was $45 billion for X a couple of years ago, to spend an incremental $5 billion just on servers to train their new AI model. That should give you a sense that this is a substantial investment. Now, one of the things we've been tracking has been the back and forth. So the story over the last 2 years, Rob, has been increasing spending in the AI space as all of the big hyperscalers scale up and are training their large language models. Then last month, we got the news that DeepSeek supposedly, trained a model for $55 million. It was basically $50 million of equipment, $6 million of training expenses. I don't believe those numbers. And then what happened was all of the US hyperscalers came out and they announced huge increases in spending plans, basically saying, we don't believe the DeepSeek numbers. We're going to be continuing to spend more on AI. And then just this week, there have been rumors that Microsoft is scaling back on their AI spending, canceling AI data center leases. Nobody's clear right now how true that is or what it signifies or whether that's just Microsoft or the whole industry will be cutting back. So there's been a lot of movement in the space. This is something we'll be watching. I suspect you'll be hearing more about this in next week's version of the 5 Things.
Gary, yeah, this is the 5 things to know in investing for the week. This is the defense issue. Please head to deepknowledgeinvesting.com. Check out our website. Sign up for a free subscription. You'll get notified of all new issues of the 5 things. We'd also love if you could subscribe to our YouTube channel, follow us on social media, use the Ask Gary on the website for any questions that you may want to have Gary answer on the show. Gary, moving forward, we're talking about armored Teslas and Joe Biden, or it not being Joe Biden's fault. Tell me more. Thing number 3, Gary, the armored Tesla controversy.
Well, Rob, here's the question. Did the Biden administration secretly approve a $400 million armored Tesla deal before President Trump even took office? The media got it twisted, and Elon Musk is firing back, as he does. Today, we uncover the truth behind the controversy, who's really behind the proposal, and why it's making headlines now. So, Rob, earlier this week or last week, Elon Musk faced horrible criticism regarding the potential procurement of armored Teslas by the U.S. Department of State. Media talking head Rachel Maddow mocked the idea, suggesting it resulted from Musk's support for President Trump's campaign, calling it hypocritical given his leadership of the cost-cutting initiative known as DOGE, the Department of Government Efficiency. Right. So what Maddow is saying is, okay, Musk supported President Trump and is trying to make the government less expensive and more efficient. And as a reward, she's claiming President Trump gave him this $400 million order, kind of this tit for tat, this corruption, one hand washes the other. And you know what, Rob? I can tell you, if Rachel Maddow had gotten the story right, we would agree with her. She did not get the story right. So basic research, if she had done basic research, if anybody at her failing network had done basic research, what they would have found out is that the $400 million proposed purchase originated under the Biden administration before President Trump took office. In 2024, again, before President Trump took office, the Department of State was directed by the executive office, that's the Biden executive office, to explore adding armored vehicles to its fleet. And they included a $400 million planned procurement of these armored EVs. And all of this took place a month before President Trump took office. And the procurement does not mention Tesla. In other words, President Trump had nothing to do with this. And there's no guarantee that Tesla sees a dollar of this $400 million planned procurement done by the Democrats.
Okay, so the procurement order, Gary, comes in from the prior administration. That aside, does that mean Tesla gets any sort of funding or order, or what does this mean for Tesla?
So there is no guarantee. First of all, the Trump administration could cancel the order. Just as a reminder, this idea that the Trump administration, who has policies that have not been friendly to EVs, are all of a sudden going to spend $500 million on EVs, I wouldn't count on that. So the Trump administration may cancel the order entirely. If they don't, there's no guarantee that Tesla's getting any of this $400 million. None of these decisions have been made. The decisions were not being made by the current administration. And why in the world would President Trump, who rolled back many pro-electric vehicle policies, award almost $500 million to electric vehicle manufacturers? Now, look, presidential advisors and donors should not receive preferential treatment for contracts, but that's not what's happening here. The other thing, in the interest of remaining nonpartisan, I would just note that none of this is the fault of the Biden administration. They put in place a purchase order, and Rachel Maddow, who apparently can't do basic research, blamed President Trump for it. So when we're saying, wait a minute, this was not an order by President Trump, this was a Biden order, we're not blaming Biden for that. The prior administration had every right to buy $400 million of armored electric vehicles. They didn't do anything wrong. It's Maddow who got it wrong, not the Biden administration.
Not sure I am surprised that Maddow can't do basic research, but we'll talk about that for another day. Gary, thing number 4, we're talking European defense stocks. They are up big. Thing number 4, Gary, tell us more.
That's right, Rob. Defense stocks are booming in Europe, but crashing in the U.S. With NATO funding under pressure, the war in Ukraine at a crossroads, and the U.S. military cuts on the table, the global defense landscape is shifting fast. Let's dive into the numbers, the policies, and the big winners in this evolving power struggle. So basically what's happened is we've gotten some really interesting comments by Vice President Vance, Defense Secretary Hegseth, and President Trump, and they've been criticizing the defense spending of fellow NATO members in the war in Ukraine. Now, this does not surprise us. DKI has been talking about this for months, and in President Trump's first term, he was critical of the fact that most European NATO members do not spend the amount of money on defense that they have committed to. They're not living up to their contractual obligations. And because the U.S. is starting to back off and saying, hey, Europe, you guys need to be more responsible for your own defense. We don't want to be the ones footing the the whole bill or the majority of the bill. We want you to take a greater role in your own defense. And European governments are taking President Trump seriously. They are starting to commit more military spending. They're ready to take on more responsibility, and their defense stocks have seen significant growth.
So, Gary, we've got Europe spending more on defense. Are we going to see the same thing here in the United States?
We are seeing the opposite here in the U.S. Basically, and President Trump was clear about this in his first term, and he's been talking about this and basically saying we do not want to be paying as much for European defense as we are. We think that Europe should spend more on their own defense. And so the U.S. is actually in the process of trying to cut military spending. This is consistent with efforts from Elon Musk and Doge and trying to make the whole U.S. government more efficient and less expensive. I would also point out that DKI put in writing not so long ago that President Trump was going to use threats of tariffs to convince our fellow NATO members to spend more money on their own defense. We always thought the threats of European tariffs were not actually an effort to get more tariffs, but rather a negotiating point to get them to shoulder a greater portion of the expense for their own defense. And that does seem to be the direction things are going. Now, who knows? We could see a shift in global alliances. The U.S. could end up spending more. We could end up with tariffs. But right now, it looks like things are shaking out pretty much the way that we told you they would just a couple of months ago.
Gary, as one more follow-up to that, does this have anything to do or any impact on the tariffs on EU exports that we talked about to the U.S.?
I think it will. Right now, talk about European tariffs. And yes, there have been some tariffs on certain specific industries or certain specific products. But right now, we don't have across the board European tariffs. I don't know that that's really the goal of this administration. I think, what they really want is for NATO members to pay what they are contractually obligated to pay. And that does seem to be the direction this is headed. Now, the one exception to this, Rob, is President Trump has said we want reciprocal tariffs. And that's just a fancy way of saying, okay, hey, if you guys are going to tariff U.S. goods at 20%, we're going to put a 20% tariff on your goods. If you're going to tariff us at 70%, we're going to put a 70% tariff on your goods. And I actually think that's really good policy. I think good relationships are reciprocal. And there is something in my view and in the view of this administration, there's something wrong with the idea that a country would say, we like free markets, but we're going to put tariffs on your goods. No, if you want free markets, that goes both ways. Reciprocal tariffs is a really good way of saying we can have high barriers to trade or low barriers to trade, but we're not going to let you take advantage of us. So I actually think the administration has done a really good job positioning themselves on this. Now, let's be clear. Policies have not gone into place yet. These things are shifting. So, could we be saying something different in a future version of the 5 things? Yeah, of course. These things shift all the time. And, stay tuned. We'll keep you updated as these policies change, as these relationships change. But it does seem like there's going to be a little bit of a shift in our relationship with Europe. But right now, it looks like it's more a matter of reciprocal tariffs and an attempt to get NATO members to pay what they're contractually obligated to pay for their own defense. That, for clarity, it's to defend themselves.
Makes sense. We're wrapping up this week's version of the 5 things. Before we get into the 5th and final thing for this week, the defense issue. Again, be sure to head to deepknowledgeinvesting.com, sign up for a free subscription. And we obviously would love if you would consider a premium subscription, access to current recommendations, buy, sell orders, premium exclusive subscriber webinars, events, etc. So would love if you could consider that, and we'll continue to pump out great content. As you can see, we try and keep it to the points on the issues. Time is money, right, Gary? So let's close it up with our 5th thing. We're talking investor education. As again, we want to bring knowledge to the space for those that are looking to expand their horizons, understand, something that they might not know much about, or maybe just want to, increase their aptitude in the investing space. So Gary, thing number 5 this week, we're getting into stock buybacks. Focus today is going to be the benefits and misperceptions of stock buybacks. Gary, why don't you start by, please, can you give us, a little bit of definition about stock buybacks?
Sure, Rob. Well, stock buybacks are one of the most misunderstood financial strategies in the market. Politicians who love to use scary language call them corporate greed. But are they actually a long-term wealth building tool for shareholders? Today, we're going to separate fact from fiction and uncover why buybacks could be the smartest move a company can make. So, Rob, what a stock buyback is simply when a company will go into the stock market, and just like you and I might buy shares in a company, the company will acquire its own shares and then retire them. And these efforts enrich all shareholders in proportion to the percentage of the shares outstanding they own. Because the shares are retired permanently, so they buy them back in the market and then retire them, buybacks are not, as many claim, a one-time benefit. Rather, they reduce the share count in perpetuity. So think about it. If, people talk about PE ratios, right? The price divided by the earnings per share, EPS, as you lower the share count, your earnings per share will go up. And that tends to make the stock go up. So when you reduce the share count, you will get higher earnings per share typically, and then you end up with more earnings growth. Stock buybacks are also more tax efficient than dividends because they allow shareholders to determine the timing of recognizing gains, and it allows them to pair gains with offsetting potential losses. You can take a short-term gain and turn it into a long-term gain. There are all kinds of things that shareholders can do to take advantage of stock buybacks that they can't do with dividends.
Gary, we've heard from politicians, people in the media, right, that stock buybacks only enrich company executives. Is that the truth?
Yeah, that is a lie. They love to use scary language. It's really fun to criticize management teams. And in fairness, yeah, there are some wealthy company managers who should be criticized, but not for this. There is this idea that they only enrich management. That is the biggest bunch of nonsense in the world. So if you own stock in a company and I own stock in the company and the CEO of a company owns stock in a company and they buy back those shares and retire them, then the share count goes down for all of us, assuming that they get good value and don't do something wrong with leverage. And we can go through some examples of how these things work, over the next few minutes. These buybacks enrich all shareholders in proportion to what they own. They do not benefit management at the expense of shareholders. They help everybody who owns the stock.
Gary, we want to talk a little bit too about examples. Obviously, there's quite a different examples in terms of ways stock buybacks can work. I don't know how you want to tackle that, but tell us some of the best or worst, or kind of what you're looking for in those stock buybacks in terms of preferences.
All right. Let's break these stock buybacks down into 5 categories from best to worst. And we'll simplify all of it. So the best case scenario is management sees incredible growth opportunities and they invest in growing company operations. That's not a stock buyback. That's management saying, wow, we have incredible opportunities to reinvest in growing our operations. So not stock buyback, where there's great growth available would be the best option. Second best option is where management thinks the stock is hugely undervalued relative to future growth, and they use their cash on hand to buy back stock. So they take their cash, which is not earning a high interest rate, and buy back stock that's undervalued. And in doing so, they create value for shareholders. We love that one. Next one down is management thinks the stock is hugely undervalued relative to future growth, similar to the one we just talked about. But instead of using cash on hand, they take on debt to buy back stock. So under the right circumstances, this kind of leverage can provide incredible benefits, but it does come with a lot more risk. Still can be a good option if management gets it right and they don't need to pay back the debt that they've taken on anytime soon. The next one, and this is not a good one, is when management makes an error in judgment and they buy back the stock ahead of declining or negative growth. When they do that, this destroys value. It is the same thing as if you or I were to make a mistake and buy a stock into declining growth and the stock goes down and we've just reduced the value of our portfolio. When management does this, it destroys value. We don't like that one. And then the worst possible scenario is management makes an error in judgment. They take on debt to buy the stock ahead of negative growth, and that can lead to bankruptcy. So there can be bad outcomes, but in general, stock buybacks are a vote of confidence by management in the company. And while a lot of the criticism of buybacks is inaccurate, what we recommend is making a careful evaluation on a case-by-case basis. What we've just done is given you 5 categories to use to think about this, to evaluate it. And so if you own a stock and management is buying back stock, try to figure out which of these 5 categories it falls into and whether it makes sense or not. But above all else, if you have bought and own a stock, why would you object to management buying the stock back, leaving you with a larger percentage ownership in an asset you already like?
Great stuff there, Gary, breaking that down for us. Kind of final point on tonight's 5 things, talking again about stock buybacks. How do you at DKI recommend people evaluate stock buybacks and when they're looking at that from an evaluation standpoint?
So generally, Rob, if I own a stock, it's because I think the outlook for the company is great and I think the stock is undervalued. If management is using cash on hand to buy back that stock, I feel like they're making the same decision that I'm making. And by definition, I like that kind of thinking, right? That's why I own the stock. So for something like that, I'd be very positive. The place where you want to be careful is if growth is slowing or has turned negative and management is taking on debt to buy back stock. And that's where you can end up in trouble. And in a situation like that, one, I'm hopefully not invested in a company like that. But if I am, that's where you start to look for signs of financial stress.
Great stuff, Gary. And that concludes this week's version of the 5 things. Again, be sure to subscribe. We'll be breaking everything down in the individual breakdowns. We'll get YouTube Shorts, TikTok, Instagram. I think we're starting to get that stuff in the pipeline out there. So wherever you are coming to us from or seeing us, thank you for your support as always. And be sure to subscribe to be notified about upcoming episodes and versions of the 5 things. Gary, final words from you.
Well, it's been an amazing 2 months in Asia, Rob. I will be returning to the U.S. tomorrow after 2
Thank
months
God.
in. I know.
Gary owes me a beer. You heard it here.
Yeah, what was that?
It said Gary owes me a beer for his
Oh,
travel.
God. I really do. Yeah, I've spent the last 2 months in Thailand, Vietnam, now Korea, where the time zone difference between Rob and I has differed from 15 to 17 hours. Now, some of you might say, wait a minute, 17 hours, isn't that just a 7-hour time difference? And somehow the answer is no. Somehow it really is a 17-hour time difference. It's been amazing being here, but it's time to get home and be in a more normal for me time zone, more on, market hours instead of waking up 4 times in the middle of the night to check stock prices. So it's been a great trip here. I've learned a lot. It's been very exciting. Looking forward to returning home. For those of you who've been watching the 5 things, thank you so much. We know your time is valuable. We really appreciate you watching with us. And special thanks to Rob. You've been so patient and filming at weird hours, talking to me at, weird hours while I've been here in Asia. Also special credit to Nazim Abbas, who has just done an amazing job every week. The things he's doing to make the 5 things better on the back end and the editing, scripting out some of this has been terrific. Intern Josh from the University of Tennessee has been absolutely fantastic. And we're very excited to bring you a new show starting next week. Finley Rowland, another University of Tennessee intern, is going to be the host and executive producer of Deep Knowledge Investing Foundations, where we're going to be talking to you about basic investing education, some of the war stories, travel stories. We're going to make it interesting for you. But Finley has been doing an incredible job, and we will be live on that next week. So again, thanks to the entire team. Thanks to the Flying V team. And thanks to all of you for watching. We will be seeing you next week from back in the United States.
Thanks, everybody. And Gary, looking forward to having you back. Travel safe.
Thank you.